The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, noon time till 1 p.m., 877-927-6648. Now, let's get to the numbers. The Dow squeaked to a new high. Today's Thursday. Yep, tomorrow's the day that we do a little bit more intensive work on the Chapman Wave methodology. So let's just say that in leg E, this is where you can start to expect some kind of consolidation. These bump ups have been really more tax-related news. These have been news-related events. The market has held very well. Look, the MACD is strong. Stochastics at 91%. No complaints whatsoever. What is very unusual is to have the rotational aspect that we've got at this particular point with one of the leading sectors, the semiconductors, and in fact, the robotics, BOTZ, B-O-T-Z, index, very weak. This is the first time we've seen that kind of divergence. To me, it's a little bit of a heads up, and it says without the news that the expectation of the tax cut and little bumps in news details that really impact the market on an emotional basis positively. A lot of what we're looking at is end of the year churning. Let me just have a little drink of water. There is nothing wrong in this weekly chart. On the left here is the daily. If you're looking at Tiger TV, in the middle is the weekly chart. On the right is the monthly chart. I made it nice and big so that you can see these lovely candles. Look at this. December. December hasn't finished. Anything happened going into the last week or two of December, but in the meantime, lovely green candle. Fabulous November. Fabulous October. Very good September. August, the doji candle. Kind of a halfway marker from this doji here to that doji back up again. So we're looking at a move that has taken us from August of, in this case, let's go all the way back. Let's go to January of 2016, where there was a doji candle, but a Chapman Wave, Roman candle. This particular candle right here, I've typed it in, it says Chapman Wave Roman candle at the low. It's very different to whereas in 2007 we got the doji candle at the top. And that says if you start to see closes above this Roman candle without taking out half of the wick of this candle of August, that's a bullish sign. Well, there was an arch formation, yet another, a second, so one Roman candle, two Roman candles, higher level, 1540 was the first one, 15,370 was the first one, 15,503 was the second, and then look what happened. Peak A, B, C, D, and we're in E. And each move is getting longer and longer as a leg to the upside. That's spectacular. You don't rarely in monthly charts do you see that in just those spectacular, like an apple or something going to highs. This is the kind of thing you would see in a monthly chart. Very, very seldom you see it in an index. The MACD in the monthly chart is beautiful. Look how that's strong. Stochastics holding fabulous at 98%. It is getting close, based on the unbalanced volume, the blue line, to some kind of a top. And that's just a top for the monthly candle, not a major top or anything. It's just saying, be ready that in coming into January, we could be looking at some kind of a consolidation. So let's put this together. The Dow is up 20 at 24,604. In my daily newsletter, I said if at 11:20 the Dow is less than the plus 20s, be careful, because by the end of the day, we could be seeing weakness. So far, all of that's worked out, but the day's young. We've got another 4 hours to go, almost. So what I'm looking at here is there is support at 24,550s. Once it goes to 24,480s, then this magnet of the 9-period moving average at 24,365. This is something just to look out for. I'm not predicting that's going to happen. I don't think just yet, but that's what I'm anticipating at some point to get a test, and we go a little bit chop, chop, chop sideways into the end of the year. We'll see what happens. The S&P. The S&P is at 2063.13, made a peak E, made a leg E yesterday. I didn't update that. I meant to at 2671.88. Let me just change that. 2671, 26771.18. And today we have not gone above that. Today the high is in the 2,668 area. Okay, so we just keep that in mind. Peak E, I could call this an alternate count, but I don't want to. There's no need to. It's an E, and it'll be a peak E if there's no new high today. I don't think there's going to be a high. I think that this inside Chapman Wave inside track resistance level is going to work its magic, and for over the next 3 to 4 sessions, we might be testing 2650. Okay, let's go on. QQQ. This is the NDX 100 trading vehicle, and it's trading at 156.40. The high of 156.69, the 28th of November, has not yet 156.66. We are 4 cents away. The high of today has been 4 cents away from making that high. I'm suspecting that there's a chance now, and I'm anticipating that it depends a lot on whether there's a boost finally in the SMHs, the semiconductor index, to give a bigger bounce. The SMHs are up 46 cents at 98.15. Okay, not great, but okay. The best move it's had in a while, funnily enough. But this QQQ series, if the MACD crosses positive, it could actually begin a much steeper move. If it deflags slower, that's going to be important. The next 2 days are quite important. Friday's close going into Monday at this time, going to be very important. Let's quickly go to the IWM, give you parameters. It is stuck. It is stuck at a peak C at an all-time high. It's so unusual. It looked good for just a moment at about this time yesterday. It was looking good. Then all of a sudden started to fade. I don't know. You've got to watch the Russell 2000 closely. It's trading at 151.56, down 22 cents. Maybe we'll have a chance to go a little deeper into it. But I do want to go to gold. Gold's up $5, almost $6 right now, 12.54. Not a great move. It had a big spike yesterday. It closed not as well. It tried to rally this morning. It's still closing. I think this is more a bounce within an oversold condition based on the weekly chart, based on the monthly chart. It could go a little higher, but I think it's going to have that characteristic of Chapman Wave single leg syndrome. And what that means is unless that single leg A makes only a small retracement and then starts leg B in a strong way, this has the chance to be one of those emotional pop-ups that suddenly starts to fail. If you look at the dollar had a bit of a pullback yesterday. It's getting back some of that loss yesterday by rounding up 28 cents. I won't rush this. We'll take time. We'll go through a lot of questions. We'll cover those questions at the same time. Question on Twitter, question on CAR. I'll be back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Canada.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So we're looking at the E-mini trading right now. This is the March 2018 down to 25 at 2666.75. Now we're looking at this trend line that started from that peak right here in the 10-minute chart. That A minus is the exact thing I'm talking about in gold. You just got to be careful. It's not a single leg failure. In this particular instance, went to an A and then became an A minus because the broke the low. I think that gold is telling us it's getting ready for some kind of a bounce of maybe a longer duration, but it's a process and it doesn't, so far as my eye says, it isn't there yet. It's just the first hint that it's attempting some kind of a bounce. If you're looking at the E-mini 10-minute chart, it went to a peak E-top around about 4 o'clock this morning, and then it came down, lower lows and lower highs, and right now the low is 2664.50 with an arch formation. A break of 2664 would say you're going lower, and a push above 2670, 4 points higher, just 3.5 points higher, would say, okay, good. In trading range, could be stuck in the trading range for a while longer. Let's get out of that. I wanted to finish the dollar. Has a nice bounce here, so it's made, I'm going to move this over. It is in a cup formation. If it closed where the low was today, I would have said, that is really not good action. But having bounced like this with the MACD and stochastic starting to improve and a nice move up in price, the weekly chart tomorrow, Friday at 4 o'clock, is going to be really important. If it's under 93, that's very poor. If it's over 94, that says good action. We'll see. So silver, I didn't do silver. Silver had a great move yesterday, but couldn't hold it. It's an inside bar today. Silver's really telling me. I did a lot of work over the last couple of days. I've had a chance to do it with the gold and silver charts because I really did not want to miss a potential move up in gold because some of those low cap, but they're very low price gold stocks have fabulous percentage moves to the upside. So if you can get them when they're down in the 1s and 2s and 3s, wonderful opportunity for price expansion, but big potential percentage gains. I decided I would step away. I had a look at one of my favorite to look at. We don't often buy it. Is ASA. Had a really nice move, but the technicals in the weekly chart says, it isn't quite ready. And this is the gold miners. It's like a package of 5 or 6 South African gold mines. It wasn't good. Another one that we almost always get if I'm looking for the real price low ones is NG, which is Nova Gold. That had a very nice move. This is in leg B. So maybe there's some action going on, but it could be quite selective. One that I often look at now, because we had a caller from Boston who had this gold, GOLD. It was plummeting down at that particular point on the 2nd of November. I said my advice is I would personally just exit the trade, and then if I wanted to buy it again, I'd buy it again, but I'd at least know that whatever the news is right now, it's not acting very well. But my advice to her was, because she'd had it for a while, was to take a little bit off right there, and then if it rallies higher, to have a trading stop, to just move the stop higher, but not to go through what she went through before if it was going to go even lower. If it went under, it turned out the low was the 89 area, 89.79, and I think I said it's 90. I said if it closes under 90, I'd be real careful. Well, it's gone right to that 89.70 level a few times, and it's managed to rally. So watch with something like gold, which is telling you a lot. I mean, Rand Gold Resources, this is a really good stock. Monthly chart has held pretty well. Keep an eye on stocks like this, especially if you're familiar with some of them. See how they're reacting. So it could be an individual situation. I wanted to look at high grade. Copper HG is trading up very nicely. It's starting to fill in that horrible candle of the 5th of December. 3.10 goes all the way down to 2.94. Whoa, that's a huge move. But now it's coming back very nicely. This is going to be a tell for me in many ways. And I'm suspecting that copper's in a trading band, going towards the upper part of the trading band, but keep an eye on it. This is much better action than it was before. I'm missing out. I wanted to look at, I wanted to look at crude oil. Crude oil right now is up 25 cents. Yeah, it's also stuck. It's the opposite. It is in a high-level consolidation, whereas copper was in a low-level consolidation. So crude is stuck, and I'd say a close below 55 says you got to be careful, because going to the 54s would be really poor. But I think it's stuck now between 55.50 and maybe 58.90. I said there's a chance that it could go to the 59 level. If it goes over 59, suddenly what comes into focus is the fact that it hasn't been in the 60s for a very long time. And that's going to be a clue. If it goes into the 60s, watch out. I think transportation will be hurt a little bit. We've been watching that very closely. Finally, we'll look at TLT, which is the T-bonds. Nice move up, 127.15 up 17 cents, all within this trading band. If you look at this chart here, which is what I said to my subscribers to my opening call, the triple yield chart, the 30-year is still coming down in the arch formation. The 10-year got stuck. It was trying to rally, but it's stuck in the upper part of the range. The 5-year has gone to a leg D on a weekly basis. That says be careful here. Other Ds have said might hold for a week or two, but then you pull back quite sharply. If there's any match with what happened when to the peak C back in December of 2015, then even the market has to be somewhat careful for January. So I'm watching this. This is that whole yield curve thing. At this point, flattening. We're going to be watching it very closely. All right, now I can go to CAR, which is the first question I had of the day. When I look at CAR, Avis Budget Group, monthly chart, leg B. What was the statement? The statement was, so JMO said, okay. Hi, Basil. Would you mind please showing your Chapman Wave count to the weekly chart of CAR? Okay, just as well I read it. Hey, I have it as a new leg A, but would the week ending 11/3/17 be a peak G or a restart leg C? That would change the current count. Thank you, Basil. I wish you and your family the best for the holiday season and New Year. Hey, James, same to you, absolutely. And you know, you have learned a ton in the Chapman Wave methodology. That information that you typed in there, you needed to know quite a bit and have done this quite a bit to have the experience to say that G was also perhaps a G/C, because the MACD did turn down, but then it crossed back positive last week and this week. And the V-shaped pattern in the stochastic said, hey, if there's a rally like a V-shaped rally and you stop dead right on or just under 42.40, the high of the week of the 3rd of November. That could be a V-shaped double top. Breaking above it says, oh, wow. Is that an A? Well, to get an A right now in a weekly chart, let me just open this up to show you something fascinating. There was this arch formation. So how many times have I on air discussed arch formations that hold very well and then start to turn, even if they take out the left side low? If the MACD and stochastic give a brand new buy signal and then a buy mode, the target will be like the euro-dollar currency pair. Your target would be above the high of the arch. In this case, the high of 41.53 made on the week of the 9th of December 2016. We are there. So I'm going to take this break. I'm going to do a little bit of work on this. I've got some unfinished work that I've done. For some reason, it's moved around. I'll finish this up, and we'll be back, and we'll talk in more detail about Avis Budget Group, trading at 43.02, up 32 cents.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. Here's the bigger picture that we're looking at of car, Avis Budget Group. These are rental cars. So fascinating. Look, in the Chapman Wave methodology, you have the arch formation, or in this case, it looks like the H formation, but it still creates an arch, the H pattern, lowercase h. If I take the low that was made at 2173 on the 26th of February, 2016, and I go to the peak D top in September of 39.54, there's a pullback to a doji candle. Then there's a rally, and it goes to an E and an F. That could have been a brand new A and a B, but the stochastic started to fall almost immediately, and the MACD was turning down. So alternate count says, yeah, you could have an F/B, but very quickly you'd have to say, oh, it's not going to work. All right. So the left side, right side price time match then said there could be, and let me just draw this in because it's called the Chapman Wave inside wedge target line. So there's your target line. And it says within the contents that we have, you're looking at lower lows and lower highs. And then it goes from the peak F. This is almost like, remember the weekly chart of the October 2007 high in the Dow. You went to a D, you pulled back, then you suddenly went to an EF. Actually, I'm trying to think, I think it was an E, and then it went to an F and a G. But it was this, what I call the right shoulder. I used to give it a nickname. I used to say that it was the double camel hump. You know, there's some camels that have two humps, but nobody either knows that or even remembers that. I like to have little cliche headlines for the titles for my charts that kind of explain everything, like the Chapman Wave inside wedge target support line, inside wedge and the upside target resistance line. So in this case, it's an arch formation. You try to find the plumb line in the middle. This is the one little doji candle right here. And then it goes 1 week later. It's 1 week early. It gives you that exact low from, it goes all the way from June of 2000. It goes all the way from February of 2000 to the low of June of 2017. I mean, that is a lot. That's almost 2 years, right? 1, 2 years. And then what we're looking at is finally it makes the low a week early. There's a little bit of a hesitant candle, and then boom, it's on its way. But wait a minute, you've got the same left side, right side price time match in a V-shaped pattern going up. But if I use what I like, a mathematical formula where I can use the low or the high, it's great, because if I use the low that was made right here on June the 9th, 6/9/17 at 20.71, let me just put that in, 20.7169, did I say? 17, something like that. What we have is that there's a left side, right side price time match that says, aha, using that plumb line right there on the 9th of June, by the week of the 8th of December, you should have pierced the high that was made. I forgot to type it in on the 9th of December of 2016 at 41.53. So what happened was it spiked above it in a shorter period of time, and it goes to peak G, and it plummets. The MACD turns down sharply, but doesn't hold underneath the 9-period differential. Doesn't go sharply and hold underneath the slower moving average, the red one. The V-shaped pattern in the stochastic is very sharp. It doesn't go below 20, and that says there's still some internal strength. Now, Jamie, I get to your question. What is the count? Well, I'm going to make it real easy. First of all, I'm going to type in D/A, even though somehow I'm saying to myself, I think it's more a D, and then we will get a new a pullback, and then we'll make a higher high, and that could turn out to be a B. But just to be cautious, I'm calling it a D. But there's nothing wrong yet in the actual chart formation on this is a weekly chart. There's nothing wrong. So when you have an overlapping wave, and the Chapman wave is called the overlapping wave, years ago people would say, oh man, anybody can have an overlapping wave. What it means is you're either going up or you're going down. Who couldn't say that? And what I'm saying is no. What it says is it's above the previous high. The MACD is cross positive. The stochastic is rallying. And there was a doji candle of last week, and there's a much bigger move this week above it, and it's at a recovering over a 1 year high. So this says there's a lot to say that maybe it's an A. I'm just suggesting after all the stuff going on here, it's hard to imagine that you're only going to come back for at least one retest. So, Jamie, I'm going to say you've done all the analysis. This is all I can say is if you're long, I would stay long. I see no reason at all to change that posture. But I do see a reason to say with a peak D potential with a silent doji today, if there's a move below 40.99, the 9-period moving average, no, I'm going to say if there's a move below 40, I'm going to go all the way down to 40. Then I'm thinking you got time on the downside. But I'm still saying that the weekly is holding well. So a longer term position, I wouldn't hesitate to say, stay in this position for now. It depends where you got in, of course. But do anticipate that we're just about to have a pullback, and it could be sideways, it could be deeper, it doesn't matter. But you're at a D. MACD is very strong on the daily. Weekly is 91. That's a very strong. I wouldn't do anything. Would I? This is not a short, but it is something to say. If you want to add to it, give me another email if this thing does pull back under 40, and then we'll do an assessment to say, okay, where would you add? Is this just a single leg A that's going to fail? What do you want to do now? So this is where I'm just saying, don't get carried away. Don't let anything change your opinion if you are long. But if anyone's here thinking, oh, this is a great short, maybe for a quick pullback, but there are too many. The weekly is good. The monthly is starting to improve tremendously. This is good for the economy. It says good for 2018. Shorter term, it might be a bit of a pullback. I wanted to spend time on that as we went through it because of the good questions. Good eye. Congratulations. GD wants to know, what about Goldman Sachs? Well, I spent some time yesterday looking at Goldman Sachs. The breakout was really important. Look at this left side, right side price time at. I've decided, I've just done this long enough. I've been around for a while. So I'm going to give out a lot of information. People who took my course on Friday told me, most have sent me notes, say, hey, thank you very much. We got a lot out of it. There was a lot of review, a lot of stuff that most of them knew, but I still went through it very carefully from the basics. So I feel very strong now. I'm going to make a big deal about the Chapman Wave methodology because it served so many people so well for so long. So there's a cup formation. It turns out there's like a double U formation, soft W. So when I look at this and the manner in which Goldman Sachs GS trading at 257.02 up $1.46 has acted this week, I'm calling this leg an E with good technicals, not great technicals, but very good technicals. And at the same time, it's done the left side, right side price time match in a little longer time period, maybe 3 weeks. So it says it's still building momentum. And that says you've got to now look at the monthly chart if you want a big picture of Goldman Sachs, which I'd like to do. And I'm going to show you something very interesting, fascinating, but really interesting. I'll be right back. Basil Chapman, Target Technicians Hour, Dow's up 9, S&P's down 0.72.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
In some, Goldman Sachs, I think, is going to be moving higher on a shorter-term basis. It could just digest these big gains that it's had. That's what I wanted to say. And it's only B in the monthly chart. I'm going to go to Peter in Park City. Hi, Peter.
Hey, how are you, Basil?
I'm very well. How are you?
Hanging in there. Hey, I want you to scroll back so when you pulled up your 5 and 10 and 30-year chart, can you pull it back to the last time it was inverted? How far do we have to go back? Was it 07, 06?
Okay, let me squeeze this a little bit here. Squeeze.
You have to squeeze it a lot.
Yeah, so this goes back to 208. I know I'm going back. Oh, wait a minute. Whoa, 208. Okay, give me the question because I'll go back in a different way.
So the real question is, so if we're starting to invert slightly, okay, so, bringing it in where it's not near inverted yet, but when we went prior to inverting, probably in 06 or 07, what are we going to look for?
Okay, so
because I think that's when the market will actually finally correct. So that's what I'm looking for.
That's a very good question. I'm going to see if I can go back 20 years. I should be able to. I haven't done that on this chart.
Actually, yeah.
Yeah, so let's just go back, and here we go. Wish me luck. Okay, great. Now let's see. You never know with this software, right? Okay. Oh, that's right. That's what I used to have this, and then I thought to get the chart, it's just, I don't need all that data, but I do need it now. So we're looking at 2005 into 2006. So this is something that I had spent some time. I spoke about. I had it on a different chart, then I had to redo it. Yeah, you can see where I had it. There was a high that was made in 2007, right here, and that was the spike in the 30-year going to 5.4%. But there was a higher move back in 2004. I think it was. Yep, in May it went to 54.84. Oh, is that right? No, it went to 55.97. So 5.9 cents, let's call it 6. So now what you want to see is, this is something that I've spoken about because I'm a visual artist. Now, someone like Dave White does all this incredible work with the formulas and all that. So it comes out as a mathematical response to your question, and you can get a mathematical answer. In other words, it's verified by the stats. I'm looking at this, and I might miss something because I'm looking at visually. But if you look at this this is really your question. When there was this squash And right in 2000, right, the best would be to say February, the week of February, there's a weekly chart. February, the week of the 3rd of, the week of the 3rd of February in 2006, 47.35. You don't even have to know the price. That's where you start to see the inversion where the 5-year, that's the cyan colored one, just started to take off, and it actually pushed the 30-year up, and then the 30-year went higher. So basically we're looking at right at 2006. So it turns out that in this particular move right here, in this particular area of 2005, that was the all-time high at the time of the HGX. Some of you in the den might remember Tom and I were trying to anticipate when we finally got it was a reward. But boy, trying to get the top in the home builders, it was a challenge because it just kept going higher and higher and higher. Now what you're looking at is this is a different chart, you see. Keep in mind, if I can take a, let me do this. I'm going to take a picture of this and see if I can post it in a different way. Taking a picture, let's just go to this right here. Okay, I've got a picture taken. And now we're going to move on and we're going to go to where we are today. You see,
yeah, perfect. Yeah.
Once again, because I'm visual, I immediately look at this and I say, hey, this is the first time that I can recollect in a while the severity of the 5-year in such a short period of time going to a leg D. That's number one. I haven't seen anything so quick. You had this back here, but it wasn't quite as sharp in price back from the 9/11 low in the 5-year, the week of the 8th of July. But this time, and look what happened, everything went up in parallel motion. This is different. So this, now I'm going to take a picture of this and I want to show you something very interesting. Hopefully I can do it. Take a picture of it. I'll just do this. All right, right here. Did I get it? Yeah, okay. Let's see if I've got it. Picture taken, I think. Why is it still holding there? What am I supposed to do? It should have gone click. All right.
Hey, Basil, real quick, happy holidays. I got to go get the newborn. I'll just keep listening. I just want to give you a heads up.
Okay, yeah, it's a great call, but there is a difference. That's what I wanted to point out. And I'm going to show it right now if I can actually move this across. Okay, thanks for calling, Peter. I'm not sure why I'm not getting a snap on my camera. Do it again. Click. Oh, okay, I got it. There we go. If I can get out of this, I hope I haven't messed this up. My beautiful chart, don't tell me I've messed it up. Let's see if I can move out of it and come back in. Come back in, please. Is that a permanent thing I've got? Anyway, what we were looking at is there's a very, I need the background, the black background. So let me see if I can get out of my snap mode. Okay, get out of that. Close it. Move to something else completely different. Please change. Oh, I have no idea how I'm going to get out of that. All right, I hope I haven't messed up this chart. What a beautiful chart. What I want you to show is, you see this move, you can still see it. Now I've got a white background. That's no good because you're not going to see the white very well. But you had the 5-year scream up to the 10-year, right? But the white is still quite far away, and that's the divergence. The 30-year, which is not quite as important as the short-term rates, is not being impacted. In fact, it's still rising based on the TLT. So this is what I really wanted to do with Peter, was to show him that the TLT was still rallying, that the let me show you the monthly chart. Monthly chart of the TLT says, here we go, that it held the Chapman Wave up channel inside track propellant zone or support zone. 116.79 was the low right here back in early 2017. It's not a great looking chart, but it's moving high. It's made a peak A, made a peak B, made a peak C, and it's trying to make a D. This is the smallest. Look how big these are. A. This is an A, B, C, D. A, B, C, D, E. I mean, these are huge moves. This is the tiniest little move. So it's struggling, but it is moving higher, and rates are in the 30-year coming down a little bit. But look at this. The TNX, the 10-year, here we go. The 10-year is stuck in a range. It's not breaking out, not breaking down. This is the 10-year, and of course the 10-year is the one that I say, if I can show you something incredible, look at this. I'll squeeze this. Look at this 30-something year down channel. Isn't that incredible? It's just starting to flatten out now for the first time. So something is going to happen with rates in 2018. And now as we go out, I'm going to show you the FVX, which is the 5-year, and there you go. Look, a rectangle formation, but making an arch within it in a leg C in the monthly chart. There is a difference. I'll be back. Basil Chapman, Tiger Techniques.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
So let me just do this real quick. We've got a question that done a little while ago. One of our denners, Fletch, had mentioned LGF.A, which is Lionsgate Entertainment Core A shares, movies. So here's the chart, and he had mentioned that it looks good. Next thing you know, it's up like $1.48. Good eye. So it went to a peak D on the 3rd of October at 33.68 for two double tops. Remember, we saw the same thing in the SMHs, two double tops, exactly the same high. This was the all-time high. Then it pulls back very sharply, goes to the 27s. Excuse me. And then it goes to peak A, B, C, and again it makes the D with a doji candle, pulls back to a little doji trough C, has a big move today. I think it can move to about the 32.70 area, maybe the 33.15, and then that's the big question. Is this a single A? Then it pulls back. The technicals are improving, but they're not great. The weekly technicals are way strong, and that says this is the same as CAR. It made a peak F, very sharp pullback in the weekly, makes a V-shaped recovery, goes even higher to a G, and now look, The MACD and stochastic in the weekly are holding quite well. Make it real simple. It can only be a B if it goes above 34.75. Goes to 34.76, that's new leg B, and all of a sudden the monthly chart says, aha, we're moving higher, and that the monthly chart really improves. A break below 30 point, a close below 30.40 says, nah, it needs a little more time. But so far, it's very good action. Real quick questions. The Delta Airlines, DAL. Let's see, this is in leg A, B, C, D, E. There are a lot of E's that I'm looking at. I think we're in for a little bit of a digestive phase coming up, but the XAL, because crude oil pulled back and then it ran right back again, Delta's kind of stuck. It's made a peak D. It's in a high-level consolidation, making probably a rectangle pattern. So I'm not giving a short or a buy right now. I need another day or two before I can make up my mind. Real quickly, as we go out, a question about the monthly. We've discussed that. TIF, I haven't looked at for a little while. Tiffany's acting very well. Here again, ABC, leg D. I think we're getting close to some kind of a pullback, regardless of what the tax thing is. Hey, stay tuned for Steve Rhodes. Thanks for being here. Have a wonderful day. I'll be back a little later with Tom.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.